So welcome back to Reimagine. Here we are in January of 2021. We finally made it out of 2020 and we are kicking off this year with another brilliant conference brought to you with some fascinating people that we are speaking to all throughout this season and on into the future. Today I am joined by Emi Lorincz from Ledger, Director of Sales and Business Development. Emi, thanks so much for being with us.
Thank you so much for having me, and it's exciting to be here at Reimagine 2021. Yeah. And it's also exciting how 2021 started. So looking forward to discuss that as well.
Yeah, certainly. We finally made it through 2020. I'm not sure everyone thought we would. There's some light in the tunnel, but we'll get to all that in a moment. Firstly, Emi, for those who aren't familiar with yourself, your background, maybe tell us a little bit about yourself and what brought you into the blockchain, crypto world, and to your position at Ledger today.
With pleasure. And yeah, just wanted to add about the pandemic. You know, it's so funny. I try to look at always the positives, and what 2020 brought us, it's definitely two things: that we all became better cooks, and also that we started to learn the places we live at and get to know it much better, or started to learn to love the places. And so a brief intro to my journey throughout the crypto scene or crypto sphere. I started working for Shapeshift in 2018, and I was based in Zug. I was heading the customer service for EMEA. And then later also looked into enterprise blockchain for 2 months, but I realized quickly that I want to go back to pure crypto. And then early 2020 started working for Ledger, the B2B arm of Ledger, which is the Ledger Vault for those who are not familiar with the Ledger Vault. And basically, we're helping institutions managing their critical digital assets in a smooth and secure way.
All right, a wonderful experience to bring you over into the field and into such an important part of the space. Now, Emi, obviously, we're going to touch on many things throughout this conversation, but I would be remiss if I didn't start by speaking about a topic that many have thought about around Ledger recently. Obviously, unfortunately, throughout 2020, Ledger was sort of hit by a number of security breaches and hacks that hit your company and hit you guys. Now, you've been very open and transparent. It's been a hallmark of the way that Ledger has approached this since then. But I suppose a lot of our viewers would be interested to know, as we start 2021, looking forward to the future, how is Ledger planning to move forward and help rebuild some of the trust with its community in the wake of those unfortunate hacks?
Absolutely. So I focus on the B2B arm, not the B2C. And for everyone who's listening and who wants to learn more about what the approach of Ledger is, I would direct you to the podcast of our CEO with Peter at What Bitcoin Did, because right after this event, Pascal Gauthier was available to speak to Peter, and everything is really nicely described in this podcast. We are definitely making measures towards avoiding anything like this in the future. But yeah, as I told you, Asher, I'm really focusing on the B2B arm, and happy to discuss anything about the B2B.
Absolutely. And the Ledger Vault product, the B2B side of the business, is a fascinating product that you guys have put together and really working towards some of those institutional developments, which obviously are incredibly relevant as we got to the end of 2020 and into 2021. So again, for those unfamiliar, maybe tell us a little bit about the Ledger Vault product and what some of your focuses are on the B2B side.
With pleasure. So basically here the needs are really different from what customers want to have on the B2C. At the B2B, you need governance. You also want to have more compliance. As in, you want to make sure that the compliance element is there, and everything what you do within the infrastructure of the ledger vault, everything is auditable. You also want to make sure that that the infrastructure is intuitive and it's easy to use. And basically, if you're used to operate in a traditional financial way, or as in you have structures and flows, which are also in the financial services company, you're expanding into crypto, you don't need to reinvent these processes, and you don't need to reinvent the wheel. You can replicate within the infrastructure and the governance framework of the ledger vault the current processes you have. Also, it's important to highlight that this product comes with a pooled insurance of 150 million USD, and we are supporting currently 13 blockchains plus 1,550 ERC20 tokens, and we are adding new blockchains to the ones we are already supporting, and yeah, it's just exciting to see how the B2B arm is evolving. And maybe to add that we launched last year a joint venture with Nomura and CoinShares, which is Komainu. Komainu.com is the website for those of you who want to find out more about this joint venture. Basically, Ledger is bringing the technology layer with the Ledger Vault solution to this GV.
So it's an interesting thing, the idea of institutional custody in this space, because obviously when we look at the sort of legacy financial, sort of digital financial system that has existed, a lot of banks and a lot of those large scale institutions, and I'm talking prior to crypto days and prior to blockchain days, they chose to build their own bespoke software and build their own systems rather than relying on third parties to custody and secure things. Here now with Ledger Vault, you're saying to institutions, no, don't build your own systems. Here we have, as you said, a replicable system ourselves that we're able to offer you guys. What's the incentive for institutions to do that, other than ease? But what sort of is the incentive, and why are institutions doing it? And are you seeing institutions really take this up as they come more and more into the blockchain and crypto space?
That's such a good question. Thanks for asking this. So we really emphasize the buy versus build scenario, because building an infrastructure is really expensive. You need to think of the initial investment. So you need to hire a bunch of blockchain engineers, which are not easy to find good blockchain engineers. And so you also need to think about the maintenance, about the redundancy. Also, you need to figure which assets you want to support. Maybe if you only want to support Bitcoin, you can set up a multi-sig on your own. But if you're not, your expertise is not to be a security company, then you're putting your company at a great risk. And we have within Ledger, we have the Ledger Donjon, which is our own hacker team. So they are constantly trying to hack the products of Ledger, and this is how we also constantly improve. So they are obviously not succeeding by hacking the Ledger product, but as you know, the security industry is often described as the game of the cat and mouse, because you always want to be ahead of the hackers, and it really requires to have a lot of engineers who are constantly making sure that your product is ahead of the hackers when it comes to security.
And does this seem to be an appealing, offering, I suppose, as it were, to institutions? Are institutions understanding the concept that it's not worth their while to invest in building their own infrastructure, and that having this agility and this changeability, as it were, keeping ahead of the cat and mouse situation is appealing? And can maybe you tell us some examples of where you've seen that really, really successfully come through?
So what we see is that a lot of companies are going ahead with trying to build their own infrastructure, and then later realize that this is really challenging, and they compare capex and opex costs, and then they later realize that, listen, this is so much effort, and they need so many human resources as well. So at Ledger we have an R&D team, and then we also have over 100 engineers. So half of the staff, more than half of the staff, is engineers. And throughout 2021, we are looking to recruit 100 more engineers. So it's really, really not easy to have, and not advisable to have your security infrastructure for securing critical digital assets internally. I'm not sure if I understood the question. If you could repeat, what kind of example are you looking for?
No, I mean, I guess, you told me there about, certain institutions attempting to build their own and failing. And it's just interesting to myself, and I think to our viewers, to understand, where there are also successful examples. I mean, I'm not sure if you can reveal the names of particular clients of yours, but maybe at least conceptually a time in which a business has been brought around to the idea of cryptocurrencies by realizing that the threshold maybe isn't as high for entry as they thought it was.
Yeah, I mean, I cannot highlight a specific case here, but I can tell you about some of the clients we are proud to have in the circle of the Ledger family. So basically, we're working together on the institutional side with Bitstamp. We are working together with Crypto.com. A European player out of Liechtenstein is Bank Frick, who has been using our product for a long while. And another European player is uHodler. Maybe you heard of them. They are a lending platform, so pretty much similar to BlockFi and Celsius, but based in Switzerland.
Okay, and now you have a focus, if I understand correctly, in sort of the Central European DACH region, Germany, Switzerland, Austria, that sort of area. Can you tell me a little bit about institutional crypto uptake in that region and what you're seeing from your perspective there in that part of Europe?
Ich spreche wunderbares Deutsch. So yeah, absolutely. So basically I'm taking care of this region because I'm based in Zurich, and also my German is pretty decent. I have a sweet accent, I would say, but yeah, even my German friends are saying that my German is pretty okay. So what we are seeing in this market is that more and more private banks, especially now in this market conditions, what we have, they are having FOMO, and they are looking for ways to not miss the train. And not just private banks, but also bigger banks like Credit Suisse and also UBS are looking at least into tokenization, and their clients are demanding exposure to Bitcoin. And another typical trend is that we see a lot of ETP issuers in the Swiss market, and hopefully in 2021 the ETF is also, the Bitcoin ETF is going to be approved. Let's see, fingers crossed. Another specification of the market, and maybe why we have so many players in Switzerland, is because the government made a really conscious decision that they want to be supportive of blockchain technology and supportive of crypto assets. And in the recently passed blockchain law, they outlined the rule sets or the regulatory framework for the security exchanges, and yeah, this is going to happen in Switzerland, what is great. And then when we look at or take a closer look at Germany, then the BaFin is really having a strict regulation towards who can custody assets, and you have to apply for this license in order to custody the keys of your clients. So basically, regulation is definitely shaping out. It's always a tricky game here that regulators should not regulate something what then cannot be innovative. So yeah, curious to see how BaFin is going to finalize its framework.
Mm. And you touch on a very important thing there, particularly for a company such as Ledger and the Ledger Vault product itself. The idea of this, cross-jurisdictional legislation you've got to work with, whether we're talking about US regulators and their approach, European regulators and theirs, or all across the world. There's so many different regulatory approaches. When you're working alongside businesses and institutions that want to start integrating a Ledger Vault or Ledger Vault style product into their investment portfolio and into their understanding. I mean, how do you manage juggling all these different jurisdictions, and do you see one place that's doing it right or perhaps better than others?
Yeah, so the Ledger approach is always to have a dialogue with the regulator and to make them to familiarize them with in this case the vault infrastructure, and absolutely to making sure that we comply with the rules, what they outline and what they have, and maybe to outline here or to emphasize that we are a technology provider. So we oftentimes don't need to apply for a license as a technology provider because we are not a financial institutions player. But this is the strategy further, that we want to stay a technology provider. So on multiple cases, like a few examples, we work together with the French regulators in Europe, also with BaFin, or SN had exchange with BaFin, and then also met FINMA. And yeah, it's really important to be in a dialogue with the regulators, I find.
Certainly an important role, particularly as we see so many institutions come on board. And important to think about how regulators are doing it, but also the interests of individuals. And I want to start to think a little bit about and question a little bit about your own sort of personal views and experiences on certain things. So last November, you gave a TEDx talk in which you called Bitcoin the guardian angel of privacy. Could you, talk us through a little bit about that, what that talk was about, what your focus was, and why you see Bitcoin playing such a central role in the future of privacy?
Absolutely. Maybe not at the current state, but I believe that Lightning and Taproot is going to bring that privacy to the Bitcoin blockchain. And also in the current state of Bitcoin, basically I can pay something through my wallet in Bitcoin without having to reveal at the merchant what my name is and where I live. So yeah, it's this talk is or was aiming towards creating awareness that not only for in communist regimes is the case that your privacy is at risk, or you don't have the financial privacy you wish to have, or the one you're entitled to. And privacy is a fundamental human right and a valuable asset. And we really often don't realize when we accept the terms and conditions of a new app, we are just not even reading that. We just click yes, 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 I accept it, and we don't realize how our data is being used. And yeah, it just if we don't start to understand this, then we may end up in a world where a lot of our data is centralized. I'm not saying that necessarily in the government's hands, but in the hands of corporations which are monetizing that data, because with the help of algorithms they can create trends, or they can create patterns where they can influence our behavior for reaching a specific outcome. And they're really monetizing it, monetizing the algorithms and the actions they are trying to reach. And yeah, we are just like giving away our data for free. That's not cool. And I believe that with time, even millennials and even Gen Z is going to be more, or has to be more cautious about having a smaller digital footprint. And with the help of cryptocurrencies, some cryptocurrencies, right now with Zcash and Monero is easier to achieve that.
Right, and that's I was actually where I was thinking to take it next. So talking about privacy coins, which have in some areas had some pretty distinct backlash from regulators and lawmakers who accuse those using it of money laundering and illicit actions and all sorts of deeds because they can no longer see it. And it obviously raises important questions about privacy. Does someone have a right to privacy, even if it's not about necessarily having something specific to hide, just because they feel they want the right to their own privacy by using a coin such as Monero, Zcash, Zcoin, any of these sort of out there? What are your sort of latest thoughts on that?
Well, we've seen, I think it was last year, December, that BitMax delisted Zcash, and maybe other exchanges have to do this. We need to see also how the Biden presidency is going to, or what kind of approach they are taking towards cryptocurrencies and in particular privacy coins. Well, I'm hoping that they can stay on, or they can be further in use, and as you've seen, the privacy report, or not privacy report, but this really good report of chain analysis, illicit transactions have just come down, I think, tenfold when it comes to cryptocurrencies compared to 2 years ago. So statements like, cryptocurrencies are being used for money laundering and for illicit transactions is just not true, especially if we put this into perspective of what is happening with fiat, or what is happening with some banks. Yeah, it's just not the case. Well, I'm not entirely sure what will happen to Monero and Zcash, but what do you think about it, or do you have any insight?
Myself, I mean, I think with the bringing in of someone like Janet Yellen, into the Biden administration and taking charge of Treasury there, I think that it could be a difficult time. There might be a little bit more cracking down, a little bit more of a regulatory approach. She's proven herself to be a very regulation and sort of straight shooting focused economist in the past. So I wonder how that'll impact it from the American side and the US side. That being said, I'm not sure. I guess you would know better about what the European approach may be to such coins. But this will be potentially a 2021 could be a year to test some of the claims to privacy and anonymity that take place in a lot of the crypto space. Would you agree?
I agree on that. Yeah, we will see what happens to the privacy claims in 2021.
Certainly, really interesting question. And just generally looking out to 2021, Emi, what are the sort of big trends, focuses, innovations that you're looking forward to, or potentially hoping to spearhead over at Ledger?
Well, we are going to see a lot of, probably hundreds of institutions coming into crypto, just as PayPal last year, MicroStrategy, and Square. And I think there will be a lot of crypto cards issued. I think central banks may even try to buy Bitcoin. Who knows? Also, I believe that M&A is going to play a strong role. And then Coinbase is going public, but there was rumors also about BlockFi going public. So there will be a lot of companies going public, and the Bitcoin ETF is going to get approved, hopefully.
Fingers crossed. I mean, regulators have a lot on their plates this year. We'll have to see how that one goes. But I suppose I wonder, you mentioned M&As there and the general trend towards consolidation, which is something I think we've seen a lot. And in all the interviews and conversations I've had throughout this conference, we've had so many voices saying this is a different market to 2017. Yes, there's a bull run going on, but this is such a different space. There's much more maturity, institutional involvement, consolidation. what do you make of this trend of consolidation? And do you think that it's actually good for the market as a whole, or do you think it risks pushing out some of the smaller players and making this just a purely institutional based industry?
Well, maybe 2 points here. It is a different market because I think that a lot of people who have been buying because of the bubble or because of the quick price increase in December 2017, they, like, everyone gets into crypto mostly because of the quick gain. They see that, oh, I can make quick profits here, and then later people realize that this is so much more about also what the current governments are doing. As in now we're seeing the money printing going full speed, right? Like more than 2 trillion USD was injected into the economy in the US only. And people just realize that a finite asset next to gold and other finite assets such as Bitcoin is of worth. And also, for instance, the privacy element is just, I'm not saying that Bitcoin is a medicine to everything, but definitely is a medicine in a way to, or the antidote of printing money. And basically what you're saying about more and more institutions coming into the space and more exchanges are being set up, what is positive that the margins, what they are making is going to be smaller and smaller because the new consumer has so many options to onboard on an exchange and use an exchange that they have to have attractive fees, and this may push out smaller players on the long run, I believe. But the consolidation is around just like you remember that 2 or 3 years ago there was such a huge margin at exchanges in
Right.
Asia, for instance, and then it was it was this arbitrage trading pretty much what made sense.
Right, and I sort of wonder about that because looking at that arbitrage trading that used to happen in the past, and looking at the sort of fees and scammy nature of so many of the earlier exchanges, most of which have either folded or moved away or tightened policies, and as we've headed towards a more professionalized space, obviously you're right. Those benefits do come out, and people start to be able to trade with more confidence and more surety, and know that either they're getting the best fees, or as you said, just move to a different exchange and know that they can do that securely. But I guess I wonder at what point, does the crypto industry, like, is there a threat that it ends up just mirroring the existing financial system? And do you think that's potentially a problem? I mean, if we start to have all these services traded as public companies and run on similar models as the traditional financial system, do we lose the special sauce that makes crypto so unique?
Yeah, I agree with you. And for instance, I'm sure you've seen, I thought this was such a highlight of December, or was it, I think it was January now, that for instance, Shapeshift, which used to be a centralized exchange, has a new business model now. It's a decentralized exchange because they don't want their clients to KYC. And DEXs or DeFi DeFi has gained enormous traction. Like now, just last week, 55 billion was logged into DeFi. So I'm hoping that we are not replicating the existing financial system, because there is no need to do that, to replicate it with new assets, new type of assets, because these are new type of assets because they need a different perspective and a different regulation. Because they are self-regulated in a way. It is definitely a threat, and it's not going to go away this year. So exciting to see how DeFi can thrive further without being regulated.
Certainly an important question, one to think about. And so as we stand, or at the start of a new year, at the start of a new decade, depending on how you count, certain people count differently, but we can say it for the sake of drama, the start of a new decade, and people, in this hype cycle, we're seeing so many new players come on board, so many new retail users, institutions coming into the space. And it's something I've been a bit of a theme I've been asking a lot of our interviewees, what advice you would give to newcomers in the space. Now, in your position working with B2B, you can choose to aim this more at new businesses coming into the space or more new retail users, or both, as you prefer. But if you could give a piece of advice to any newcomers into the space, Emi, what would you choose to sort of help them out? And what do you wish perhaps you might have known when you were first in the space?
Oh, wow. Well, most importantly, that they should never give away their keys, right? That their keys is something what only they can see and they can have access to, and also that they should just buy Bitcoin now and then forget that they have it, and maybe just like look at it in a few years, probably, if they are not looking to be a day trader. But yeah, my friends mostly all have Bitcoins, because what I normally do is, I mean, not Bitcoins, but some Bitcoin, a tiny portion of Bitcoin. When we used to go to restaurants, it's not typical nowadays, then I always let them pay the entire check, and then the half I sent it to their newly created Bitcoin wallet. So this is why really most of my close friends have some Bitcoins. Yeah, the only advice I would give is that you can't afford, like next to the keys, that you can't afford to ignore learning about Bitcoin and cryptocurrencies, because they are here to stay, and they are here to also question the status quo and to transform our mindset in a way.
Wow, I mean, I think it would have been a very valuable thing to be a friend of yours. I can imagine paying 50 euros for a dinner once, and now I've got 500 euro in the bank. It would be a very exciting time to have had that Bitcoin once upon a time. Emi, I want to thank you so much for taking the time to speak with us today. So valuable to hear the insights of someone working, so closely with these institutions in the space that, everyone claims are coming in, but it's good to see that someone working alongside is actually seeing it and able to extrapolate why this is so important to the development of this space. Emi, I want to thank you again for speaking with us. And for all those watching, stay with us at REIMAGINE for all the latest developments, information, and just great conversations we're having here over our 2021 conference, the first for the year.
Thank you so much. Bye for now.